When will we get the big print? This idea of a big print is the idea that the government is going to need to print a lot of money, either in response to some sort of economic event or crisis, or just with the economy weakening. Maybe we could see the government come in and print a lot of money. They've done this throughout history. So in this video, we're going to explore what would cause the government to do this. Before we do get into it, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. Before we get started here, I do want to give a shout out to Larry Lepard, the author of The Big Print, which is a book that was recently published and really the inspiration for this video. I haven't read The Big Print yet. It's definitely on my list, but we could imagine what this book is about, right? It's about the next big government print, the next time that the government is going to need to print a lot of money. So let's get into some of the reasons why the government would print a lot of money. We could look back to 2020 when we got hit with COVID. When we got hit with COVID, we saw the economy get shut down, right? All these businesses were forced to shut down. And with this, we saw the government provide a lot of stimulus to the economy. We saw a ton of COVID spending. We saw the government go into a lot more debt in order to support the economy for these tough years. And we also saw a lot of quantitative easing, which is where the Federal Reserve basically buys the debt, right? And this is basically what we call money printing. When the government issues debt and then the Federal Reserve comes in and buys it, they basically create new monetary units to buy that debt. And this led to a huge increase in the money supply. We can also think back to 2008 when we had the global financial crisis. And during this period, we also saw the government buy a lot of debt. They also bought mortgage-backed securities as we had this whole housing crisis, right? And we saw these mortgage-backed securities really lose a lot of value. If you're not familiar with these mortgage-backed securities, they're basically these securities that bundle all these different types of mortgages together, and then people can basically trade and invest in them. And it turns out that a lot of these mortgage-backed securities were not very good investments, so the government had to come in and stabilize that market and stabilize the housing market. So we typically see the government do a big print or quantitative easing in response to some sort of economic event or crisis. Now, if the economy is weakening and it looks like we're heading into a recessionary period, we will see the government do QE in order to support the economy and kind of help us get out of that period, right? Or avoid a recession. But if we do go into a recession, these recessions are typically always paired with the collapse of some institutions, whether it be financial institutions like the banks or large companies. So why do governments do this quantitative easing? Why do governments need to print money when we go into these recessionary periods or we see these economic events? It's because we live in this credit-based system, right? This debt-based system. And people basically take out debt for everything, right? They take out debt to start a business. They take out debt to buy a home. They take out debt to send their kid to college. And when prices are going up and when the money supply is growing and when we're seeing monetary expansion, everything's good, right? Because prices continue to rise. As prices continue to rise, people are able to pay off their debts, right? Because they're seeing their investments go up in value. But when we see the economy contract and we see prices come down and we see the dollar strengthening against assets and investments, this means that people start to default on their loans, right? They aren't able to pay off their debts. And when people aren't able to pay off their debts, this credit-based system starts to get into problems. And it really starts to get into big problems because these lenders, aka the banks, start to take big losses. We can look at the COVID crisis as a good example. In 2020, when the economy shut down, we saw people getting laid off from their jobs. We saw businesses shutting down. And all these people and businesses have debts that they need to pay off, right? So if the government didn't come in and provide all this COVID stimulus, if the government didn't do this huge print, then all these people that had loans to pay off, they wouldn't have been able to pay them. And if these people couldn't pay off these loans, then they would have defaulted, right? They would have had to declare bankruptcy. I'm sure a lot of them still did. But in this scenario, if the banks took these huge losses and people found out about it, what are people going to do? They're all going to rush to the bank and try to take out their money at the same time. But the thing about the banks is that these are fractional reserve institutions. They don't have everybody's money. When you deposit your money at the bank basically takes that money and they lend it to someone else. So if everyone goes to the bank at the same time and tries to take out their money, the bank doesn't have the money and the bank fails. And then every other institution that is connected to that bank, or anyone who's like keeping money at that bank, right? Businesses who hold their assets and their money there, they're basically going to go under as well. So you kind of have this default spiral if we see the economy contract and we don't see the government come in and provide liquidity, if we don't see the government come in and expand the money supply. And this is why the money supply will always need to rise higher in this credit-based system. And the reason why it's really a Ponzi scheme, right? And why if you're going to hold dollars, you're going to get wrecked, because the only way for people to continue borrowing money and for this credit-based system to expand and grow is for prices to keep going higher. As soon as prices start going down, right? If we see investments go down, right? We saw the stock market crash briefly before all this COVID spending in 2020. Then people take big losses and we just see everyone start to default. And that's not a situation that we could have. And we could really see how the system works if we look at a chart of bank credit. So let's go ahead and take a look at that now. As you can see, this shows bank credit from 1973 to the present. And as you can see, it's just continued to expand. And that's because the only way for the system to work is for the debt to keep growing, right? For the money to keep growing. And we just see people taking on more and more debt. And yeah, it's really just a horrible system. I'm not a big fan. I'm a much bigger fan of the Bitcoin system, but we're not really going to talk about that a ton today. So that's the main reason that we see the government print money. It's to prevent debt collapse and keep prices moving higher. Now let's talk about what's going to cause the next big print. Now I've briefly already talked about this, but I think that what is probably going to cause the next big print is a banking crisis. And the thing is, this banking crisis will probably be caused by something, right? Let's say we head into a significant recession and we see people defaulting on their loans, right? People aren't able to pay off their home loans, their mortgage, or maybe people aren't able to pay off their business loans because their business is failing. This could lead to the banks taking big losses. And if the banks take big losses, we may see some of these banks go down, especially because of the framework of the banks, right? The structure of the banks with this fractional reserve system where they basically don't have to hold any of your money. And the banks also have another huge problem. They have this problem where they loaded up on these long-term treasury bonds back in 2020. So in 2020, when we saw the economy crash and we saw the stock market crash briefly, everyone was panicking. We saw the government lower the federal funds rate to 0. And basically, when we had all this COVID spending, when the government went into all this debt, we saw all these banks buy up these treasury bonds that were being issued at very low yields. Now, they might have thought this was a good idea because they thought maybe we were going to go through this, bad economic period for a while where assets weren't performing. But because we saw all this government spending, we saw asset prices actually take off, right? We saw the stock market take off. We saw Bitcoin and crypto take off. And we saw inflation take off. So really, these treasury bonds that were yielding like 1 to 2% or maybe even under 1% were a horrible investment. But the banks went long on these bonds. So let's go ahead and take a look at a visual here, which shows the unrealized gain or losses for the banks on securities securities. And as you can see, around 2020, we see the banks go negative, right? They're starting to take these big losses. And if you look at this chart, that dark blue area are these held to maturity securities, these treasury bonds. And you could see that, we've seen the unrealized losses go down a bit over the past couple of years here, but they're still pretty bad, right? These banks are sitting around $400 billion in unrealized losses. So I think that the banks are in a very vulnerable position right now. One other thing that I've been following lately is the real estate market. Now, we know that the commercial real estate market has not been doing great. As we are transitioning to this internet world and we're seeing more remote work and we're seeing less demand for these big office buildings, we're seeing the price of commercial real estate heading down. And we know that the banks have lent out a ton of money for commercial real estate. So I think we could see the banks take some big losses there as we just don't see demand for these big office buildings. And then we're also seeing a discrepancy between the buyers and sellers when it comes to residential real estate. It's no secret that home prices have gone up a lot. And I think that as people are starting to want to sell their real estate, sell their homes, there really just aren't enough buyers out there because the younger generation can't afford homes at these crazy valuations. Let's go ahead and take a look at a visual which shows the discrepancy between home buyers and home sellers. And as you can see in this visual, there are more home sellers than buyers right now. And if there is more supply on the market and there isn't demand, if we see this discrepancy continue to grow, this could lead to a housing crash, right? Or at least in real terms. And that could lead to the banks taking some big losses. So who knows? I think that eventually we are going to see the banks get into more trouble because this credit-based system just continues to expand, and the more it expands, I think the more vulnerable it is. Another thing that could cause a big print would be war. It's no secret that geopolitical tension has been high over the past 5 years or so. We've had this conflict between Russia and Ukraine, although it looks like it's easing down a bit now. And then we've had a ton of drama in the Middle East with this conflict between Israel and Palestine and then Israel and Iran. And we all actually just saw the US directly attack Iran a couple of months ago, which is something that we typically don't see the US do. So who knows? It looks like these conflicts have kind of eased recently, but if things start to heat back up, and if we are to get into a war scenario or a world war type scenario, it's going to cost a lot of money to fund that war effort. And if the US were to get more directly involved in these conflicts, and if these conflicts were to escalate, the US would need to print a lot of money in order to fund their war effort. So that is another thing that could lead to a big print. We can also just look at something that would cause a significant recession or economic crash. We've had these tariffs. We saw back in April that Trump introduced these Liberation Day tariffs on the world, and this had some consequences back in April. We saw the stock market and the bond market crash at the same time. I could definitely see these tariffs being a catalyst for the next big print. If it puts a lot of pressure on US businesses and we start to see these US businesses fail and they're unable to pay off their debts, and maybe if it puts a lot of pressure on US consumers and we see prices shoot up and people aren't able to afford to live, right? And they start defaulting on their debts, that could lead to an economic contraction. It could lead to a debt collapse. And we know that the government will have to print their way out of that. We can also just think about a scenario where we keep monetary policy too tight. Now, the federal funds rate is around 4.5%, I believe, right now. And I know that the current administration really wants the Fed to lower rates more. And if the Fed does lower rates, I think this is going to lead to more inflation, and it'll lead to some problems for the treasuries market. It's going to lead to yields going higher, in my opinion, but it will also lead to asset prices probably going higher. So in a way, it will prevent debt collapse. However, if we keep monetary policy tight, if we don't see QE from the government, if we see the federal funds rate at the same level, or if they raise the federal funds rate to combat inflation, that could lead to credit collapse, right? It could lead to businesses failing, and that could lead us into a recession. So the Fed kind of has to walk a tight line here. Do you want to keep monetary policy tight to combat inflation? But if you keep things too tight, what will the repercussions be, right? Maybe you want to loosen monetary policy a bit so you don't run into this situation where businesses are failing and people are defaulting on their loans. Another thing we can think about is an unexpected event. Nobody saw COVID coming, and look at how much it damaged the US economy. Look at the impact it had. What if we were to get another virus, another pandemic, or something like a really bad natural disaster that cripples the US economy? An unexpected event could send us into a recession, right? This credit-based system is very fragile, and if we get one of these unexpected events, and I guess you could say that something like war could maybe be an unexpected event as well, it could cripple the US economy and we could start to see things fall apart pretty quick. Now, the last scenario that I want to talk about here is a scenario where maybe we don't get this big print, this big event where we see the government print a ton of money, but a scenario where we get more of a gradual print. As many of you should know, the US is in a ton of debt. Over $37 trillion in national debt. And the national debt just continues to grow. We're seeing the interest on debt expense continue to grow, and we're going to see the deficits continue to grow. And as this US debt grows, these US treasuries, right? These US treasury bonds become less and less attractive because the supply continues to grow and grow and grow. And the thing about this system that we live in, this credit-based system, is that it's all dependent on the US treasuries market continuing to be a viable market. If people start to lose interest in US treasuries, in US debt, then everything falls apart, right? If people aren't demanding US debt, then the government, the Federal Reserve, has to come in and buy the debt themselves. When they do that, they need to create more money. This leads to more inflation, and eventually you just get into this situation where you eventually get to hyperinflation. So with the debt continuing to grow, I could definitely see people just continuing to lose interest in US treasuries, moving into hard assets like Bitcoin and gold, or even something like equities. And with that, the government just has to gradually print more money to buy the debt themselves. Now, if they are to do this, if the government does need to continue printing money to buy the debt, then I do think we will eventually head towards a collapse, and really a collapse of the banks, the lending institutions, as these institutions hold a ton of debt. And as we see less demand for it and we see inflation go up, these banks are just going to take losses on their treasury bond holdings. So that's going to lead to bank failures and other failures across the economy, really for any entity that is overexposed to dollars and US treasuries. But who knows, maybe we don't get this big print event at first, and we get this more gradual print, right? Where the government just needs to keep printing money in order to support the US treasuries market. I don't really think it'll play out like that. I think at some point here, we will get some sort of collapse with this credit-based system. I just think it's too fragile. And anytime we get a threat to the US economy and we see prices start to fall, or we see the dollar strengthen against assets, then we just see this debt start to collapse. So I do think we'll see the big print. I'm keeping my eye on these tariffs. I'm keeping my eye on the housing market. I'm keeping my eye on the state of US businesses, how they're doing. And I'm really keeping my eye on the banks and these unrealized losses, because I think that's where we really are going to see this big print. When the government needs to come in to support the banks, the lending institutions, the nodes of the economy. That's going to wrap it up for this one. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.